is on the rise, making that dough in the crypto paradise. Watching it go, buying low, selling high. Riding the wave, I'm here to stay, living in the digital age. No banks, no fees, just decentralized. It's crypto paradise. Ooh. No banks, no.
Alrighty, let's kick this thing off, surfers. We are live. It is January 30th, Friday. Happy Friday to all. Yesterday was a little tough. Let's hope today's looking better. We'll, of course, go over the chart, the big crash, what may have caused that. But we are looking ahead, guys. Kevin Warsh is the new nominee. He will get confirmed for the chairman of the Federal Reserve to replace Jerome Powell in May. We predicted Trump would come out very shortly after Powell did not cut rates and nominate somebody. Kevin Warsh is the guy. We will discuss whether this is bullish, whether this is bearish, or whether, in fact, no one can really know the future. Binance doing what they can to combat the FUD. Seems like every other person in my feed is saying, burn them down. F these guys, prison again for CZ. And I'm actually with them on all that. CZ now coming out, Binance coming out. They are going to be buying $1 billion worth of Bitcoin with their reserves they were holding in stable coins. Is that enough to quell the FUD and keep the barbarians from reaching the gates, so to speak? I don't know. We'll have to see. This is, I think, a longer story than maybe people are realizing here and now. I think it's going to play out over many months. But, yeah. How are you doing? Let's just start with that little gut check, little emotional check after yesterday's wreckage. How are you feeling there, Nick?
Yeah, it was a pretty shitty sell-off. We kind of talked about how that was coming. We'll look at the chart and what rejection we saw there, and then we didn't really have any good fundamentals to support it. We are seeing a little bit of a positive reaction. Maybe that's because Trump named the new Fed chair and he's very pro-Bitcoin. I don't really know. But, man, the wreckage wasn't just Bitcoin and Ethereum for once. We did see red in the stock markets off of their all-time highs. They gave it all back. And gold spot prices dropped from $5,600 to below $5,000. And when you're talking about the largest asset in the world, that 10% move in a day comes with trillions and trillions and trillions of dollars of lost value. People talk about Bitcoin being about too volatile, but it's a $1 to $2 trillion asset. How about the largest asset in the world, 40 trillion, moving 10% down in a day?
When assets are as inflated as they have been, particularly gold, silver, I mean, parabolic moves, guys, over the past 60 days. Smashing all-time high every single day. Of course, at some point, there's going to be a reckoning. There's going to be a big old bloody day. Leverage getting flushed out. Top buyers getting crushed. The only question in my mind is this the start of a consolidation and therefore a rotation into other assets? Or are we going to see another bounce like gold's done every other time it's had a big dump during this run-up here?
It'd be lovely if we start the consolidation, because this first dump, you see panic across all markets. We saw Bitcoin and Ethereum get hit and others. But if we consolidate here and kind of meander down, even to this first moving average down here at $4,600, this is where we can see the rotation once again, like we saw just a couple months ago and like we saw last year in April. Hopefully, and I believe that same rotation will occur. Well, Bitcoin will start outperforming gold. Gold sits dormant and or down and to the right, and Bitcoin has its moments in the sunshine. When it happened about a year and a half ago, I think Bitcoin ran from like $70,000 to over $100,000. And when it happened just a couple months ago, that's when Bitcoin did run from $80,000 to $116,000. And of course, Bitcoin has been down and to the right for this whole parabolic move out of gold. So let's see if we can get some rotation in the markets. But again, it is going to spook all markets when you go down 12% in a day, the largest asset in the entire world. Trillions of dollars lost. Let's have some consolidation, and then let's keep meandering lower here. What do you say, you?
Absolutely. And I think that's probably more likely than not at this point. I'm not sure I see another top blast on gold. It feels like maybe the Kevin Warsh pick. Kind of a let's calm the markets a bit sort of pick, because he represents not a dramatic change, not some, it's like a Rick Ryder pick who's going to be very combative and adversarial with the other Fed governors, but someone who works within the system, someone who was himself a Fed governor, very much, of that breed, also sort of bridges the gap between Wall Street and the Fed. So it's a safe pick. And if the markets have been concerned about the Fed's independence, and maybe that was one reason gold was running, well, we don't have that concern as much anymore in the forefront, I think, of investors' minds now with this Kevin Warsh pick, which is a pretty safe pick by Trump, I think. We can get into that more. But, yeah, I just think gold probably, more likely than not here, going to trend a little bit downward to consolidate, which would be great for other assets, of course.
I wonder if that massive silver shorter, that massive whale who had like 35 million on the line, that silver would go down and not up. Well, he had a stop price. He got in at like 112. The stop price was 135. It hit 121, and now it's all the way down to 99. I wonder if he kept that open, had conviction, if he got scared. I mean, we talk about, oh, bad day, whatever, but we're in spot positions. That guy was literally $10 away from losing $35 million on a trade. And then right when he wakes up in the morning, boom, now he's bigly in the green, probably by like 15 to 20%, and then add on the leverage there. Do you think that guy still has a short open? Do you think he survived the night? That's a lot of fear going on there.
I bet he did, man. I bet he did. Big swinging dick guys like that, I think they just YOLO it. I don't think they close it out in a huge loss right before liquidation. Maybe they do. I don't know. We'll have to, we'd have to check in on that. But good for him. I never thought silver was going to teleport up to like 135 or whatever he had it at. Felt like this 120 was kind of the top, and here we go. Seemingly he was right, so good for him. I did see on the other side of it a post that someone had long silver, and they actually got wrecked and liquidated. So, there's a winner and loser on every trade, guy. This is very PvP in these markets.
Again,
so,
I do not want to ever see traditional. I don't ever want to see traditional finance people say they don't get involved in Bitcoin or ETH because it's too volatile. When you literally saw silver do a 4x in the matter of months and then go down 15% in a day. I mean, that's very indicative of the same price performance of Bitcoin and ETH. That's true. But Bitcoin and ETH are much smaller assets compared to gold and silver are now the number 1 and number 2 most valuable assets in the entire world, making very similar moves. So that is not a cause for concern, or you can't use that as an excuse anymore. If you're playing the silver and gold game, the largest assets, you can't say that Bitcoin and ETH is too volatile when they're 1/10 of the valuation.
Yeah, I think that's an underappreciated trend over the past, 5-10 years in all the financial markets. Volatility has appeared across assets that maybe you wouldn't expect them to previously. And I think that's because of retail. It's because now of leverage, right? You can go, I believe, onto Binance. I think they just opened up leverage trading for gold and silver. So you can long and short gold and silver over on Binance and probably a bunch of other exchanges. You got leverage now, bunch of retail, highly emotional markets. We saw it with Microsoft just the other day. I mean, Microsoft dumped like 15% in a day as well because it missed earnings, and that's one of the top most valuable assets and companies in all of the world too. So volatility is present across all asset classes. Don't get it twisted. Don't think that just because you're in precious metal, you're safe from the volatility.
Yeah, and talking about YOLOing, there is a lot of news articles here. So instead of making it so perfect and making everything flow, we're just going to hit fire and start with this first one and go through it, give our opinions, give the outcomes, and let's see what's going on with the overall markets here. The first one is this. Wu Blockchain, Binance announced that it will adjust the asset structure of its Seifu fund, gradually converting the original 1 billion stablecoin reserves into Bitcoin reserves, with the conversion to be completed within 30 days from the date of this announcement. Binance will regularly review the Seifu fund's asset value. If, due to Bitcoin price fluctuations, the fund's market value falls below 800 million, Binance will replenish it with additional Bitcoin to restore the fund to $1 billion. This, to me, is kind of a positive, obviously, but also kind of a slap in the face, and I'll let you go into this because, I have a soft spot for CZ and Binance, but I know you're going to let them have it here.
Yeah, I mean, it's kind of too little too late, in my opinion, to make up for 10-10. Look, it's good to see. I mean, no one's complaining that they're going to buy $1 billion of Bitcoin. And does this help kind of support that $80,000 price level that we're sort of at now and been hanging around at for a while? probably. So I think that's all good. But man, if you lost money on 1010, and we lost money indirectly, we've lost money since then. I mean, we should all be pissed, and we are. So if you lost money since 1010, this feels like too little too late. What we really need to see, and I didn't provide you the post for this, but someone broke down all the internal data and all the internal, order books and the oracles and all these things that are very technical. We need transparency. What happened? Why did it happen? Why will it not happen again? They haven't done any of that, which is really crazy. I'm surprised no one's forced them yet. I know there is a lawsuit, I believe a class action lawsuit either has been filed or will be filed. So in all likelihood, we eventually get some of that information coming out in a lawsuit through discovery. But man, we've got no transparency on that. So look, I'm happy. Does it help the $80,000 price floor? Probably. But man, if you lost money on 1010 or thereafter, feels a little bit of a slap in the face.
Yeah, I know you were talking about there's some estimations on what the hole really is. So them putting $1 billion back over 30 days after potentially extracting X amount of billions or causing people to lose X amount of billions, and now the market, obviously we were in the 90s or even hundreds before that happened, and now we're down at $82,000 per Bitcoin.
We were at 126K. Were we not? I mean, weren't we like at all-time highs right on October 10th, and then like that's when it all went to shit? I mean, I'm pretty sure we hit like all-time highs around that time. Maybe we were already trending down a little bit, but we had just hit all-time highs very shortly thereafter around that time.
Yeah, you're right. I mean, yeah, you're right. So the day before it happened, we were at like 120, coming off the all-time high, looking for a slight correction and trying to find support at like 116, 117 for the next rally. And then 1010 was the next day. Big capitulation wick all the way down to 105. And in that moment, we thought 126 to 105 felt rough. Had the big relief rally, and then just no liquidity, exit liquidity, market makers all the way back down to where we are today at $83,000, $84,000 with our biggest relief rally coming a week ago and to 98K.
It's been a tough past 4 months for everyone who's stuck around and stuck with crypto. Good for you, man. You guys deserve it all. You know who else deserves it all? Our boy AJ buying a dip, 81,500. Good for you, man. I mean, you bought the dip. You legit bought. I didn't even know it hit that low. That might be like the little wick on this move. You hit it exactly, my friend. So good work there. Every time I bought the absolute red and the panic selling, etc., I've been very pleased long term on that trade. So hang in there. I think that's going to do very well for you.
We got Dovakin saying Guten Morgen Loot. I don't know if that's right or not. It sounds German, though.
That's German. That's absolutely German. We got some Europeans in the house. We will try to refrain from talking too much shit about your politicians. So forgive us if we do. And Final Curse in the house saying hello. What's up, man? Welcome to the show, by the way. If you guys are new to here to Crypto Paradise, you have questions, you have thoughts, you have charts you want us to look at, you have tokens you want us to evaluate, we would love to hear from you, so don't hesitate to jump in and ask any questions. What do we got from Arthur Hayes today?
I posted this. I'm looking at the timing here. This morning at 1:30 a.m. my time, so about, 7 hours ago. Arthur Hayes says roughly 300 billion fall in money liquidity over the past few weeks, driven mostly by 200 billion rise in TGA. Gov could be raising cash balances to fund spending in case of shutdown. Bitcoin falling, not a surprise given the fall in money liquidity. We've been saying this for a long time. Bitcoin is a proxy of liquidity. ISM has been flat. Quantitative tightening just ended. There is no quantitative easing. We only had a couple interest rate cuts. The interest rates are still very high. And that's why we believe that the extension of the bull market could continue for Bitcoin. Why we didn't have euphoria on Bitcoin, Ethereum, plus altcoins. And this is what Arthur Hayes is saying here. My only part to this is I thought there was just a vote by the Senate and they just agreed on a spending bill, and there isn't going to be a cut now in our shutdown in the government. Polymarket odds fell from 79% chance of a shutdown by the 31st down to 33% chance of a shutdown overnight. So maybe I'm missing something there, or maybe there's another vote, but that's interesting as well.
Yeah, so the Senate voted to keep the government open, right? They came to an agreement on the spending bill. Now it's got to move to the House.
Gotcha.
And, there's a lot more sort of radical leftists in the House. But the good news is you don't need all of the left to come over and vote to keep the government. You need like 10 people to come across the aisle and be like, all right, I vote for this. And that's enough for a majority. Passes, okay, goes to Trump's desk, get it signed, get it done. So I think the shutdown, we probably averted it. If it does happen, it should be very short-lived. And you can actually look at the bets on how long would the shutdown be. And most people are betting like, okay, no more than like 3 or 4 days or a week or something. So it's not going to be one of these prolonged things. They've agreed on most stuff. It seems like Trump and some of the Dems have come together on how to rein in ICE a little bit and, you know, make it so that there aren't, you know, any fatalities happening on the streets, things of that nature. So that was the big, you know, that was the big fight they were having. It seems like they've come to a meeting in the minds on that. So what I don't know what Polymarket's saying, but I don't think the shutdown.
There isn't a ton of money here, but yeah, this is what we were seeing. There was only a 9% chance of a shutdown. Then over the weekend, when ICE killed that individual, it jumped up to 80%. Overnight, it dropped to 41%, probably right after the Senate voted to, you know, in favor of keeping it open. But now it's surged back up to 73. So somebody came in with $10, $20, $30,000 and said, nope, I still think that the shutdown is going to happen, and it surged right back up. The only reason I say that is because the dollar amounts here aren't massive. I mean, they're hundreds of thousands of dollars, but we know some of these get absolutely massive bids here. So I don't know. That's kind of crazy. When the Senate voted yes to keep the government open, it dropped off hard, and now it's right back up to 76% chance here. Yesterday was 79% chance.
They're probably seeing something in the House. Some members probably coming out and saying, this is not good enough. We still demand a shutdown. Defund ICE, or, you know, we're gonna crush the economy unless you you know, have an open border, all that bullshit. So we'll see how it plays out. I don't think, I mean, so let's envision a shutdown for a second. Do you think we can shit the bed even further on Bitcoin price, or is 82 or 81.5, whatever we hit? Is that the bottom?
I mean, some of this sell-off is probably people trying to front-run that. The people that are betting that, yeah, there's a 76% percentage of a shutdown. Last time it shut down, liquidity dried up and Bitcoin went down. That's probably what they're front-running here. And this is kind of what Arthur Hayes says. It seems like maybe the government is trying to protect against by, you know, doing some of this liquidity moves here. But it is interesting when you look at this liquidity chart. Look where we were in August and September. You know, when Bitcoin was at all-time highs, look at the liquidity. Then the October liquidity crisis, look what happened. Sharp sell-off in liquidity. Then when we ran from 80,000 to 98,000, look what was happening to liquidity on the way up. This is pretty interesting how much this correlates with Bitcoin chart. And then boom, liquidity, massive sell-off. Same timing as the Greenland FUD, the European World War III FUD, blah, blah, blah. And look what Bitcoin price has done from 98K down to 81.5. Maybe we're on to something here. Maybe Arthur Hayes is reiterating something here. It's all about liquidity. Bitcoin is all about liquidity. Risk on assets are all about liquidity. And those charts are mirroring each other, at least on the, you know, this 6-month time frame.
Yeah, man, that's uncanny. But I guess not a surprise, because if Bitcoin is in fact that asset which is most sensitive to liquidity, and that has been proven over time, then this would not be a surprise. This would not be a surprise. Maybe this is a good segue actually into the Kevin Warsh discussion, because a lot of the FUD you're seeing some degree of FUD. I don't think a ton, but on sort of the bearish take around Kevin Warsh, he's gone out previously, stated on numerous occasions that he's not normally in favor of QE, quantitative easing, to just support asset prices, whatever. He thinks that's kind of manipulation, financial jiggering. I don't know. So that's kind of the bearish take. He's come out at times and said he's anti-QE, but he was there when they did one of the biggest QEs they've ever done around the 2008 financial crisis. He was a Fed governor at that time, when they decided to save the financial markets and the auto and bail out the auto industry, et cetera, and drop rates to zero then. So I mean, he's done QE. It's not like he's never done it, but he has come out and said that he's not in favor of it, I guess, in normal times. That's the bearish take. I think the bullish take is that he is fully aligned with the Trump, Scott Bessent approach to managing the economy. So lower rates for sure, onshoring businesses, tariffs are not inflationary. AI is not inflationary. AI is disinflationary. Let's invest in key industries. He's very much aligned with the Trump sort of economic agenda, but he's also someone who can convince the other governors to come around to his position, which if you got like a Rick Reeder in there who was a true outsider, that may have been very difficult. So the bullish take is that he can kind of move the Fed towards the Trump agenda, but do it in a non-radicalizing way where it actually ends up happening, which ultimately should be a good thing. But the final thing I'll say before turning over to Nick, nobody really knows. Nobody really knows. When Trump nominated Powell, he thought Powell was going to cut the rates and be very accommodative and do what he wanted to do. Remember Trump nominating Trump 1.0? Didn't happen that way. You nominated a Supreme Court justice. Oh, they got such a track record of being super conservative. They're definitely going to rule this way, that way on all these different issues. They go opposite way. You can't predict these things for the most part. So have a little bit of faith. Understand that assets go up over time. If they're hard assets, finite supplies, that's all that really matters at the end of the day. And I do think Kevin Warsh is a good pick overall, so I'm staying bullish.
Yeah, this is a little bit of an older tweet because this is when Kevin Warsh was rumored, and I think it's official. That's what at least Trump has said. But it does go into what you thought. You know, he does say that AI-driven productivity boom is inherently deflationary, providing the basis for aggressive rate cuts. This is something that Anthony Pompliano has been talking about. The fear has always been runaway inflation, but really you should worry about too aggressive, too quick of deflation, which means that you are going to be late in rate cuts and you can cause even more damage. So he is on the side there that, hey, we need aggressive cuts. There's outlets for inflation is falling off a cliff. AI will make that happen even further. Tariffs are not inflationary. We need to cut rates. But then in the next sentence, and what he's been saying, like you said, is he does not really like doing QE. So is there a world in which just interest rate cuts with no Fed intervention as far as QE is considered, that we can still get the liquidity we need for Bitcoin, Ethereum, and risk-on assets to really have the run they deserve?
I mean, I think so. Look at what happened during the Biden administration. Look, forget the Biden administration. Look what happened when Bitcoin ran from 16,000 to 126. That was in the face of QT. That was in the face of them raising rates and removing liquidity from the economy and the financial markets. And we still got that massive run. So absolutely, I mean, I think, look, my hope is Kevin Warsh, first of all, kind of calms the markets a bit. All right, he's going to be a reasonable voice within the Fed, not do anything too crazy, not do anything out of left field, remove that degree of uncertainty. That should help the markets tremendously. And then continue to lower the rates. Maybe not to 1% like Trump wants, but I don't know, get them to 2.5%. And then drive the real rates that are actually determined by the bond market. Drive those down, because it's funny, if you look at what it costs to get a mortgage, it's still 6%.
It's only going down a little bit, 0.25 or something like that.
We need to get that lower. We really need to get that to like 3. So that will really stimulate the economy because it'll unlock a lot of liquidity from the real estate market, et cetera. So there's a lot that Kevin Warsh can do to help the markets and help the economy without doing QE. QE really should only be in cases of emergency.
Yeah, I'm on my sister's mortgage, and when we had the third interest rate cut, I'm like, hey, talk to our mortgage guy, see what the rates are at. I really want to get off your mortgage. You're married now, put it in his name. And, talk to him, whatever. And he's like, yeah, they're still like around the 6s. Maybe I can get you like 5.9 or something, but they haven't come down near as much as the actual interest rate cuts. So I'm still on that mortgage because I couldn't do that to her. She's in at like 3.25, and now I'm going to ask her to change it to 6. And it's like, all right, I guess I just got to keep waiting. I wanted to get my debt to income ratio better, but the mortgage rates have not followed suit one for one with the interest rate cuts, not like they never do. But I thought they would have been lower than they were, considering we had 3 interest rate cuts and we have potentially 3 more coming rapidly this year, and they just haven't reacted yet there so far.
Yeah, blame the bond market for that, which harder to control the bond market. But, hopefully Kevin Warsh is sort of a steady voice, calms everyone, removes that degree of chaos and uncertainty. I think had really been the core reason why we saw gold do that big run up and everyone was flooding out of risk assets and into gold. Let's calm everything down. I think Kevin Warsh represents that. So I'm staying cautiously optimistic.
The other thing is, can these risk-on assets have a run without QE? Well, maybe, with the interest rate cuts, there isn't going to be direct QE from the Fed, but maybe you're going to have kind of indirect QE from the likes of the Trump administration with these big tax refund checks. The no tax on tips is putting more money in people's pockets. The no tax on overtime putting more money in people's pockets. And then the tariff stimulus checks that are proposed as well. But that could be kind of a manufactured Trump administration QE that isn't direct Fed QE that could still pump these markets.
That's a very good point. There's a ton of tailwinds to support market go up. I don't know if you mentioned among those the proposal from Trump to basically buy like $200 billion in mortgage-backed securities directly out of the Treasury. So that's QE from the Treasury, not from the Fed, but it's QE nonetheless. So I mean, there's a lot that they can do still. You mentioned the tax refunds or the tax refunds and the tariff rebate, right? So there's a lot, man. There's a lot that can still happen and will happen. I think most of it will. So, I guess if anyone was expecting like a massive pump based on the new Fed chair getting announced, I suppose we did not get that. But long term, I think it is positive. Definitely, but this is what I was thinking about before the stream. Whatever you think about Kevin Warsh, he's got to be better than Powell. Powell, right? So I'll leave it at that. I'll leave it at that.
This is pretty crazy to see here. Obviously, there is Bitcoin difficulty adjustment, so I'm sure some miners, unprofitable miners, will go offline during this period. Difficulty will adjust down and will become cheaper to mine these Bitcoins. But it currently costs $107,000 to mine a Bitcoin, and it's only worth $83,000 as we talk about it here right now, and $81,000 last night. That is pretty wild. And as a miner, there's not much you can do about it, because even if you sell the Bitcoin, you can't offset that cost. I know a lot of mining facilities were able to get loans and investments so they didn't have to sell their Bitcoin on the way up. And that was very good to help Bitcoin price move up. But what happens here when there's such a discrepancy between the cost to mine and the actual value of what you are mining? Pretty wild to see this. This is one of the larger gaps I've seen in a long time. And obviously it's because the dollar of value of Bitcoin has grown, so that gap appears larger in dollar terms. It's probably about the same in percentage terms. But man, before this difficulty adjustment, miners are getting wrecked right now.
It's not easy being a miner, is it? But this is not unusual, guys. I did want to flag the story because I thought it was notable, but the fact of the matter, it's not unusual. Every bull run and bear market, and this always happens. Handful of times throughout different market cycles, where the cost of mining exceeds the price of the Bitcoin. This is not an unusual thing. And what it does is kind of culls the herd a little bit. Some non-profitable, non-productive miners go offline and they get replaced by survival of the fittest, guys. The other thing, too, about this, I'll just add, is these are averages. There are definitely miners out there that are sitting in some low energy cost area whereas it costs very little to mine a Bitcoin because energy costs are low. So this is not everybody's going to be facing that big of a discrepancy. I'm sure some miners are still even profitable. But the question then in my mind is, at what point do they decide to collectively drive the price higher so they become profitable again? Putting on my conspiracy theory hat.
That would be nice. I'm sure they're rooting for it as well. And we'll see what happens with the difficulty adjustment that is set to probably happen here in the next couple days. We'll see if that makes it cheaper to mine these Bitcoin. If Bitcoin price remains as low as it is, I'm sure some miners will drop off. Here is Michael van du Pape. So let's go with Dovahkiin, Guten Morgen Loot. We got the German sounding person here. Maybe this is French or something. I don't know.
Dutch, I think.
Dutch. All the same, right? You're a stone's throw away from each other over there in Europe. That's why their cultures are so distinct but so great over there, and hopefully they don't cease to exist with the immigration crisis they got going on. Otherwise, we won't be seeing no Guten Morgen Loot. This is a phenomenal chart. The current Z-score of Bitcoin is lower than during the bear market bottom in 2015, the bear market bottom in 2018, the COVID crash in 2020, or the market reset in 2022. That's how deep we are in the bear market, and yes, we're close to an end of it. Credit to James Easton from the UK. This is an interesting chart. I mean, look at that MVRV Z-score here. Lower than even the previous bear market lows, capitulation lows throughout the years. And yes, I've been there for all of them, except for the 2015 dip, in which Richard Hart talks about in a lot of his early videos.
I was not there for 2015. Was there for all the others. They never feel great. The thing with this one is why it hurts so much more. Well, first of all of those hurt, by the way. You just got over it, just like we're going to get over this one. But in the moment, they suck, and this one sucks extra bad because gold's been doing great, stock market, everything's doing great.
And altcoins didn't really do much.
In, like this golden age of Bitcoin, 200K, blah blah. So expectations and envy have really hurt our sentiment over here in crypto, as you guys all know. But the more interesting point, I think, around this chart, can we now say with a greater degree of certainty that we've actually been in a bear market for the past 4 months? Rather than just like a correction within a bull run, and I don't know, maybe there's not a huge distinction there. But have we not been in a bear market since the crash on October 10th?
Yeah, I mean, a bear market, yeah, what's the distinction of a true bear market? In Bitcoin would say a 4-year cycle. We're going to be in a bear market for a year or two from that 4-month start. This is saying, hey, we've been in a bear market for 4 months, and due to liquidity conditions and what's coming, that bear market could already be over. That 80,000 low just held overnight. Maybe you have a recheck to 70K. That's my worst case scenario. And really, you've been in a bear market for altcoins and Ethereum for 2 years, 5 years in some cases. Ethereum still no new all-time high, floundering around from most of that 5 years. And altcoins, 99% of them have not seen a bull season still.
It's been fun, hasn't it, guys? Just hanging out with us on the stream, talking about the markets, not making any money. A lot of fun. I'm being facetious here. So look, it's been very tough. The good news, I guess, if you're looking at this chart, is what happens every time after you get one of these big, I don't know, Z-score bottoming out. I don't even know what the hell a Z-score really is, to be honest with you. But what happens? Look at the chart every time. Pump. So hopefully, plays out again like it has all the other time. And we're out of this bear market soon. My goodness.
Yeah, I mean, that's crazy. I like the black line is Bitcoin. And look at these previous bull markets. Obviously, they're going to get more and more mundane as the asset grows, or at least they should in theory, even though we just saw gold pump $10 trillion in 6 months. So that isn't always true, obviously. But you can see that happening. Here's the 2017 run. That was amazing. Here's the capitulation. Here's the next run. We were going parabolic. Obviously, we had some China FUD and some things happen, but still, if you roll this out, big parabolic run, double top, a higher high. And then here is the sell-off from FTX, the bear market. And look at this rally. And this is another reason why it just doesn't feel like we're on the 4-year cycle anymore. We're lined up with the ISM. Because look at this. Just a 45-degree angle rally here. Bitcoin, 126,000. And this is Bitcoin's chart. Ethereum's chart looks even more mundane. Altcoin charts look even negative. So, I mean, this is not a parabolic move that we've seen over history with Bitcoin, that we just saw with gold, that we just saw with silver, that we've seen off the recovery from NASDAQ, S&P, Dow Jones, Russell 2000, literally every asset, Pokemon cards. And Bitcoin has given you this. No parabola in here. No euphoria in here. And this is the top asset of all of crypto. That's why this market cycle has not been fun. That's why this market cycle has not been all that profitable unless you're in Bitcoin. And we made some gains on PTGC and some outliers, but we've also been in a lot of altcoins that simply don't do anything or go down. There is no euphoria, no liquidity, which means no parabola. Yeah.
I'm trying to manufacture euphoria just on the stream by being ultra positive, guy. Everyone probably fucking hates me for it. But yeah, no, there's been no euphoria, guys. No euphoria. I hope we've learned a lot. I hope we've made some good connections, some good friendships. I mean, that's all we can ask for at this point, because we certainly haven't made any money. Good morning, Moonmutt. Good morning, Frank. Yeah, market's having a period of blood everywhere. Well, I think we're bouncing a little bit. What's happening on the stock market? Are we bouncing on the stock market? We can't have another 2% down day, can we?
Let's pull that up. It looks like
Kevin Warsh, you're supposed to save us.
It looks like Bitcoin's right around 83,000, bouncing from 81.5, so up about $1,500. Nothing exciting though. Ethereum still 2730 after bouncing from somewhere probably slightly higher low, around $2,600, 2,650. S&P 500 is down 0.31%. But I mean, when you zoom out, that thing's literally just came off an all-time high yesterday and still sitting up here near all-time highs. I wish the Bitcoin chart looked like this. My God. Gold still sitting at 5,000. Come on, rotation. Let's have a little relief rally and let's continue downward for gold, and let's have some risk on assets, get some of that rollover. That would be nice. And let's look at the NASDAQ here. NASDAQ is down 0.56%, but again, hit a double top up here, minor new highs yesterday, and still up here at 2570. If you zoom out, this is what we could have had for Bitcoin and what we just haven't. We called the V-shaped recovery in stocks. We told you not to panic. New all-time highs incoming by the end of 2025 for all of your assets. That did happen. Even happened on Bitcoin, but it was not fun, was not euphoric, and it was very short-lived. Meanwhile, stocks continue to fight the downward pressure and continue to grind higher day by day.
Okay, so a little red on the day on stocks. Nothing too notable. Not worried about that at all. By the way, this is why you should be diversified, guys. If you can be. I understand not everyone's assets and portfolios are large enough to warrant that, but you should have some exposure to the stock market, have some exposure, yes, probably to gold too, I'll admit it. Have some exposure, maybe if you can get some real estate, although I think real estate's a shitty investment. If you're all in crypto, it's very, very painful. Most of my portfolio is in crypto, very painful. Unfortunately, I do have some exposure to other stuff and it makes it a little less painful. So anyway.
Frank says, Nick, if you pull the Bitcoin chart, do you say the dip will bottom at 76K or 69K? You do not want it to go below that 80K low. We've been talking about that since that low was made. Bitcoin was making higher lows as liquidity expansion was going on. Then we had all the FUD and liquidity being pulled like we talked about with that Arthur Hayes was showing. And we just bounced 1,500 above that low. So you don't want to give up 80,000. My worst case scenario is a retest of previous cycle's high, which would be that 69K to 70K level. A lot of bears are looking somewhere between 30 to 40K. Some bears changed their valuation from 40 to 45 once we had that relief rally to 98K. If we go that low, that is crazy. 4-year halving cycle in full effect. Bitcoin undervalued compared to all other global assets in a massive way, and a massive failure for Bitcoin, not for just the past 4 years, but for the present as well. Just a massive failure for the Trump administration, everything else going on, and everything that Bitcoin is supposed to stand for failed if Bitcoin goes to 40K while gold is above 4,000 and silver's above 80 and NASDAQ, S&P are where they're at. So, let's hold 80K so we don't have to go to that, but I think that major support would be at that 69 to 70,000, which is previous cycle's high.
I think we hold the 80K, guys. I don't see us breaking down below that. Trump can do a lot to pump the market, can't he? They need to get this market structure bill passed. It looks like it did make its way through the Senate Agricultural Committee. That's very, very positive. It needs to be merged, as I understand it, the bill that the Senate drafted, which was passed on party lines, has to be then merged with the House version. Okay. So we're inching our way closer here. I know there's some concern among market participants that the final bill will have capitulated to the banks and you won't be able to earn yield on your stable coins and so on. I don't know. I don't know how I feel. I don't know if
there's a lot of big banks playing the game too. BlackRock, Fidelity, Charles Schwab, JP Morgan. And, they're going to want to be able to offer that yield to get clients onboarded into their products. And, yes, they're not U.S. Bank, Bank of America, your credit union, but they're their own banks in their own way with massive AUMs, massive power, massive donations. And I think they'll have a say in this. And I think ultimately there'll be kind of a middle ground there. And still the Clarity Act will be very bullish for crypto and stablecoins.
Yeah, that's a great point. I mean, the banks, instead of fighting that, they should say, okay, we're going to make our own stable coins and we'll earn yield on, we'll enter the fray and we'll build products similar to what USDT has and we'll do it better. It's called competition, guys. It's called capitalism. Okay, that's really how it should be done. Not, I can't compete. Change the rules to benefit me. So that's how it should go. Let's see how it will go. Overall, I think whether that provision is included or not, we get the yield in stable coins. I just want this thing to pass.
Yeah, what's interesting about this story is nobody's really talking about it because at the end of the day, it isn't a full pass of the Clarity Act. And it's kind of not meaningless, but it's step stone number one. I think the bigger thing for me is how the votes lined out. So we see here crypto czar David Sachs says the Senate Agricultural Committee voted to advance crypto market structure bill legislation, brings the U.S. one step closer to becoming the crypto capital of the world. I saw this news yesterday. Nobody was really talking about it all that much. but I think is what is more interesting. How did this pass? Crypto Armor, I don't even know if you know. It passed with a 12 yes and 11 no vote. Wow, that is very close. That is very, very close. But what's more interesting is who voted for what. And this is what we've been talking about for a very long time. If you're in investments, you're in financials, you care about national debt, you care about crypto, you care about privacy, you cannot vote Democrat. This is supposed to be a bipartisan issue. More people are crossing the line for Bitcoin, for crypto, blah, 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 blah. The 12 yes votes, all Republican. The 11 no votes, we passed it by one vote, every single vote, a Democrat. They do not have the ability to have bipartisan policies. They do not have the ability to critically think, to think outside the box, to see the value of blockchain technology, to see the value of privacy, see the value of Bitcoin. They can't. They cannot leave the party line for the better good of you, the American citizen, or the global markets. 12 yes, all Republican, 11 no, all Democrat, and we are literally one vote away from the Clarity Act not even getting out of the starting gate.
It's pretty simple. The Republicans stand for individual freedoms, self-sovereignty, privacy, capitalism, lower taxes, lower handouts, pro-business, pro-crypto. The Democrats stand for nanny state bullshit. Take from the people who have had success, give it to poor people, immigrants, lazy bums, scammers, fraudsters, everyone living on the government dole. And crypto is a direct threat to that pipeline of money from the rich and give it to the poor. So, am I surprised that Democrats voted against the bill? No, I'm not. But we will reiterate once again, if you have any money in the financial markets, if you're an entrepreneur, if you're even just a hard-working dude who works at a corporation, you can't vote for the Democrats. Look what they want to do in California, by the way. They want to just take from all the billionaires and just give it to the poor people.
Yeah, there's actually even more that I think would resonate is Virginia voted in a new governor. Remember, that was a very contentious election, very close. Fraud allegations against the Democrats. What else is new? The Democrat governor won. And already, within the past 3 months since the governor won, guess what has happened? 50, count them, 50 proposed tax hikes on its citizens. Now, how does that help anybody live easier? And these aren't just tax hikes on meaningful things or rich people things. If you have a gym membership, taxed. If you walk your dog, taxed. If you take public transit, taxed. If you use the streets with your car, taxed. If you use the streets with your bike, taxed. You think these are jokes? I'm not even joking. 50 proposed tax hikes in a matter of months, all in the name of saving you money. That's happening in Virginia. For all those of you who voted Republican, you were the smart one, but you're getting fucked. And for those of you who voted Democrat, I don't even know if that is real because there's fraud allegations there. Well, this is what you paid for. You want to be socialist, and now there's 50 tax hikes against you. And I guarantee no matter how poor you are, you're going to be feeling it some way or another. Do you have a gym membership? Probably not because you're fat and you have blue hair. Do you walk a dog? Do you ride a bike? Do you drive a car? Do you ride a bus? No matter where you look, you're getting taxed. It is crazy to see this going on. I don't understand. We literally had... the Tea Party thing happened over a 2% tax on tea. There was other things, obviously. But now we're getting taxed left, right, and center, and you're electing officials who want to tax your everyday lives no matter what you do. They want to keep you in the house, and that's it. But, oh, wait, there's also an internet tax. If you have internet in your house, taxed. So you can't even do that.
That was great, man. I just want to know one thing. How the hell are they going to tax someone for walking their dog? Like, how do you even do that? That makes no fucking sense. But I did see the same news, by the way, that you're not making this up. This is all over, I even think I saw it on mainstream media, not just X. But, yeah, man, it's absolutely nuts. I don't know anyone who would willingly... Why do you want this? Why do you want to live in this world of just tax?
All in the name of we get those taxes and it goes to help the other people. Your neighbors that need help can get it, even though we know 90% of the tax funds just happen to disappear.
Yeah, man. This is madness. Oh, geez. I got to get out of a blue... I'm living in a blue state, too. the tax I pay enormous taxes as well. I mean, let's just call a spade a spade. The the feds take a tremendous chunk as well, apparently going to Somali immigrants to scam scam all of us with their leering centers. So the whole thing is infuriating. Hopefully there's going to be a backlash and we don't lose the House, don't lose the Senate in November. And that's, Trump is working towards that. And I think just to bring it back to like Kevin Warsh, bring it back to the Fed policy. I think when you line everything up, all his policies around tariffs and the rebate and the tax refunds coming in, lower rates, and many other things, I think he can engineer a recovery, a financial market recovery, an economic recovery, such that they don't get crushed in November. Because that would be really a shame if they did.
Yeah, there's plenty of people out there who are brainwashed and think that's the right move and still think that Kamala would have been better, whether in financial markets, your daily life, or whatever. I would argue with anybody here who's a Democrat, probably not many, because they probably tune out because we really don't give Democrats many props, but here and there when they deserve it. If you're a Democrat, put some comments in the text on what would have been better, why would it be better. I really can't ever find a single sector in which I think performs better if Democrats have power. That's just the truth. Whether it's immigration, global peace, financial markets, crypto, nothing in my mind does better under Democratic power ever. And now just the light that's been shining this past year, whether it was from Doge, FBI, Trump administration, it's crazy how much they were getting away with. And it's crazy to think, I get mad sometimes when I look and I'm like, only 1.5 million deportations. You're lagging behind Obama. Oh, Bitcoin's down. I'm pissed. I'm this. I'm that. I'm whatever. And then I think of what it could have been. I'm like, holy shit. Imagine the fraud numbers if Kamala would have got 4 years. Imagine the inflation rates. Imagine what would have been going on globally. It's like, that is eye-opening. Crazy to say the least. But here's somebody who thinks that asset prices go higher. Billionaire Grant Cardone just acquired another $10 million in Bitcoin. Cardone Capital is buying 82,000 to 82.5K range on Bitcoin using monthly rental income from apartments to systematically stack Bitcoin instead of holding cash. The plan is to accumulate 3,000 Bitcoin by the end of 2026 and 10,000 long-term to help back a future IPO. And what's interesting here is Grant Cardone has made his wealth off the back of real estate. And even him, right now, at this current point in time, is saying instead of taking the 10 million in profits and going into more real estate, he thinks that Bitcoin will outperform, and he's buying the dip. He only started this with Bitcoin in the 60s and 70s, I believe, and he's been buying all the way through the top, like Michael Saylor was, and now he's buying the dip once again, monthly, based off the revenue that his real estate is producing.
Love to see it. Love to see it. I think this is further evidence of called the Great Rotation going on Bitcoin for the past many years, from the early OGs to the more sophisticated Wall Street types who are buying into these levels. Michael Saylor obviously being the most notable of those, but Grant Cardone coming in. I mean, and he's out there pushing it, which I love to see. He's out on his socials, he's doing his videos next to his private jet, etc., talking about the benefits of crypto and how it's actually a better play than real estate, which I completely agree with, by the way, as someone who has a condo in Mexico and also Bitcoin. I should have just bought more Bitcoin. But in any event, I love to see this. Very happy that he's buying the dip, and this is what we need. We need more Wall Street super rich billionaire guys buying into these levels, holding for a long time, and let's get the early whales out. That's what's happening, guys.
Here's another notable thing. We talked about Binance buying $1 billion of Bitcoin over 30 days, which for Binance is kind of peanuts in my opinion. And also they potentially did a lot of harm on 1010. So hopefully they buy more than that. But hey, extra buyers of Bitcoin is always good. And Binance doesn't like to lose money. So I'm sure they're going to do everything in their power to try to get price to go up after and as they buy this $1 billion worth of Bitcoin for their strategic reserve. Justin Sun, finally back in the news. Haven't heard the name in a while. When markets are good, when there's memes and pop culture going on, Justin Sun always utilizes his wealth and his following to inject himself in that. But he's been ghosted because the market has been doing nothing but going down, down, down. Ever since the banana thing, he's been nowhere. But now he's saying in response to Binance's call, Tron will also increase its Bitcoin holdings in the future. Doesn't give any data, no dollar amounts or no timing. He doesn't even say he's going to buy it himself. He's putting it on Tron. This is his way of keeping TRX relevant, saying that Tron, a network on its own, and the TRX token will have its own Bitcoin strategic reserve in the future. and will support the industry by utilizing cash funds and revenue to buy Bitcoin.
By the way, one hilarious thing I'm seeing now on Justin Sun's profile, art collector, right? It says all his various accolades and so on. One of the things, apparently he's an astronaut and a diplomat, but he's also an art collector. And next to that art collector is a picture of a banana. $5 million on a banana. You can't make this shit up. It's fucking hilarious.
Everybody called him a scammer, but he made a shit ton of money. Tron's still alive, and he still remains relevant with a 3.8 million following. So I guess sometimes you can be in that fringe of a scammer, but avoid prison, make a shit ton of money, and be relevant because you have haters and lovers alike.
No, he built the money laundering chain. Apparently, that's what Tron is mostly used for. It was like money laundering and criminal activity. So, yeah, good for him. He's a billionaire. Happy for that. He needs to buy more Bitcoin. He needs to specify how much he's going to buy. He needs to specify how long he's going to hold it for. Binance, first of all, owes us a lot more than $1 billion in Bitcoin. But why I'm happy about it is this isn't really a part of a strategic reserve so much as is a part of their like insurance fund, let's call it. It's a fund that they had in case like shit hits the fan or whatever, they can like bail people out, which I guess they cause a lot of shit to hit the fan and need to bail people out seemingly regularly. But it's not something they're going to like be actively trading, I guess is my point. And so I don't foresee them like, you buy the dip, it gets moved in this very public address, by the way. It's all publicly known. And then Bitcoin runs to 120 whatever, and then they just dump it. I guess I wouldn't put anything past them at this point, but I don't think they go that far. All the dumping they do is a little bit more secretive, a little bit more behind the scenes through market makers or whatever. So this will be transparently held, I think, regardless of how high price goes. And it's apparently going to create an $80,000, the price floor, and help support the $80,000 price floor the way they're doing it. They said if their billion ever dips below 800K, they'll just buy more.
800 million, but yeah, so that'll be interesting to see how that goes. They'll top it up. Of course, there's always the flip side of the coin. Did they make money and cause the liquidation crisis? Potentially. Are they making money off of you losing on your leverage? Yes. So arguably, they probably need more Bitcoin than just buying and filling up to $1 billion. But that's what they're doing. We'll take what we can get. That's $1 billion over the course of the next 30 days, dollar cost averaging into Bitcoin and trying to support these price floors. And like you said, holding above that 80K low is very important to the formation of the chart and keeping it as a higher low in these moments of uncertainty in the overall markets, and especially in Bitcoin and Ethereum markets, as we've seen massive parabolic moves out of stocks, gold, silver, and all we've got is a bunch of limp wieners over in crypto.
A lot of limp wieners. Is it Binance's fault, though? Binance dumped a whole lot of Bitcoin yesterday. So this is an interesting point, because I think we need to differentiate between Binance selling their own Bitcoin that they themselves own, their Bitcoin, versus users who have Bitcoin on that exchange going and selling their Bitcoin, but on chain it looks basically the same thing. My guess is, yeah, maybe Binance did sell some yesterday, but my guess is most of the selling you saw yesterday was average everyday people selling. It's not unlike the ETF thing.
Yeah, that's what I say. It's just like when people are like, BlackRock sold. It's like, that's BlackRock's AUM. So BlackRock is holding Bitcoin or Bitcoin shares for dozens, hundreds, thousands of individuals, and they can all do what they want to do as well. Obviously, BlackRock executives and BlackRock financial advisors are informing clients to be buying 1 to 5% of their portfolio in Bitcoin, but those people still have the ability to manage their own accounts. So it isn't BlackRock selling when people say that most of the time. It's usually just individuals, and that's why we have that net inflow or outflow chart. Hey, today we had a net positive inflow of 2 million Bitcoin because 5 million were bought and 3 million were sold. But there's a positive inflow of 2 million. That's why they do those charts, so you can see the bigger picture of what's going on with everybody in individual investment products.
Want to remind everyone who's tuned into the stream now or later in the day, watching the recording, to smash the like, share, and subscribe. Please do so, guys. We love your support. We need your support. We appreciate your support. What else do we got going on today? It's
the only other two news articles we have here is really just talking more about Warsh And both James E. Torn and Cyrus, so one crypto guy, one traditional fogey, both say after longer evaluation that he believes Warsh will be a good decision, will be beneficial for the markets, and will be beneficial for the economy of America. Here's the crypto guy. The more I look into Warsh, the less bad he seems. Dovish at the front end, overreaction over fear of shrinking balance sheet. Arguably, he wants to reduce balance sheet so that he has cover to lower rates a lot, which is what we talked about he wants to do. Advisor to a crypto fund, so he knows about Bitcoin. He is pro-Bitcoin. He's not afraid of Bitcoin. I've seen that in his videos. Not afraid of Bitcoin. Thinks it actually keeps the Fed in check and makes better financial and fiscal decisions for fiat currencies. Has personally invested in crypto companies. Believes AI is deflationary, which goes in line with you can do massive interest rate cuts without direct QE because AI will create deflation and offset any tariff inflation. And will work closely with Bessent and Trump. Obviously, Warsh is not going to overrule those two. That's why Trump put him in power. Again, once he gets in power, who knows? Power does a lot of fickle things to the human mind. But hopefully you work with Trump. He sees the benefit in working with Trump. That brings financial certainty to the market, so which means market prices go higher. And that keeps Republicans in power throughout the rest of this year and through the midterms at the end of this year as well.
Yeah, I agree with pretty much all this take. And I think for those who are concerned about potential lack of QE coming, well, you can have QE in different forms. And if we get the interest rates lower and the actual interest rate that the consumer ends up paying also becomes lower, because again, that's been the big problem. We have a federal funds rate of 3.5%, something like that. But the interest you're paying on your car loan and your mortgage and your this and your that is like still 6. So we need to get that lower. And if that does become lower, that is a massive form of QE, as people are going to refinance. They're not going to be paying as much on their mortgage every month. It'll save pretty much the entire real estate industry, which has been frozen and crushed over the past few years. So you can have kind of QE in different ways. And I think getting interest like meaningfully lower with actual consumer facing interest much lower. This is a very bullish thing. This is a very dovish thing. So let's see what happens. And by the way, I don't think he's against QE. It's just let's just use it in emergency circumstances.
Right. Here he is, Michael Saylor, sharing the video that I saw, the clip from Kevin Warsh, wearing his Bitcoin orange tie there and kind of talking about how he doesn't fear Bitcoin, actually thinks it can be a good thing, knows about Bitcoin, knows about crypto, invested in it, and again, doesn't think it goes against the mantra of the US dollar, but can actually strengthen it in a big way.
Yeah, and I think Michael Saylor's take is an important one. The first pro-Bitcoin chairman of the federal... Yeah, absolutely. You think Powell liked Bitcoin? Anyone who's like over 70 doesn't really like Bitcoin, doesn't understand Bitcoin, doesn't really care for it. It's just a generational thing, honestly. You get to be people in their 40s, 50s. Kevin Warsh, I think, in his 50s now. When that video was recorded, he looks to be in about his 40s. They're much more open-minded to it. And I liked Kevin Warsh's opinion, which was basically it represents a sort of discipline, a market-based discipline around the Federal Reserve and politicians, etc., which I think is an underappreciated element of Bitcoin's value proposition. So anyway, I'm bullish on the Kevin Warsh thing. Maybe some people are like, I wanted Rick Ryder. He was going to drop rates to 0 or whatever. But you got to understand too, the chairman isn't the only voter. He's one vote. There's like 12 votes.
His role is to convince everybody else to also want to cut rates.
Exactly. And so if you get some activist dude coming in who everyone hates, he's like some fucking Wall Street billionaire. I'm not listening to him. I'm an economics professor from Harvard. I'm not listening to the billionaires from Wall Street. And then they descend, they fight, and it just looks very bad. Internal struggles, blah, 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 more chaos. Look, Trump caused more chaos with this nominee. Now you get this very safe guy coming in here.
Who's also saying, if you're under 40, Bitcoin is your new gold.
Amen to that. Truth. Speaking the truth. And we'll see, maybe the reason why gold had that massive sell-off was because they realized that the devaluation of the dollar, the Trump chaos sort of investment, that play and that flight over to, quote, safety and metals, that might be done with this Kevin Warsh coming in. And now we can get a little bit more risk on again. Wouldn't that be great?
Right under this news story, breaking, former CNN anchor Dan Lemon was taken into custody by federal agents. Remember, Dan Lemon was fired by CNN due to kind of his over-radicalized views and takes that he did on their live shows. Even they didn't want that on there. And now he has just been arrested by FBI and Homeland Securities with investigation going on because, remember, he went into a place of worship, into a Christian church, and kind of started to stir up a protest in there. Again, I don't think it's great. People getting arrested, journalists getting arrested, but there's still laws and rules, even for journalists, regulations for journalists to follow to maintain their innocence and what they are doing in the reporting standards there. So fuck around and find out. And if you're fired even by CNN, well, then you're a little bit off the loony bin because CNN is obviously very far left as well. So I don't know all the details there, but Don Lemon, obviously a very racial instigator. I don't like that at all. Uses his black culture to then instigate hate against other cultures, including white people. And, racism goes both ways. So I don't really give a shit. Fuck you. And we'll see what the FBI finds on you, I guess.
I mean, I would hope it's not some trumped up thing like bullshit like, oh, he, I don't know, cursed at an agent or something stupid. Like, he's got to have done something like kind of bad to get arrested, not something.
Well, the White House just posted about him as well. If life gives you lemons... Holy shit, we live in a alternate reality here. Don Lemon arrested for involvement in St. Paul church riots, straight from the White House's Twitter. Never good when they're in the crosshair of the White House. Again, I don't love this, because if this was Biden, when Biden was doing this, we were obviously very against it. Their charges came out as trumped up. The justice system, although, Trump had 34 counts, he didn't go to prison or whatever. So we'll see what comes of this. But never a good look when you got the White House, the FBI, and the Homeland Security going after you for inciting riots and, not standing up to your journalistic standards and staying within your regulatory guidance and the laws there, it appears.
Yeah, I guess I'd have to see the charges and the facts and what did he exactly do. I didn't really keep up with the story. I heard something happened at the church. I have no fucking clue what happened.
And whenever I see his face, I just scroll because it's nothing I want to hear anyways.
Yeah, so I mean, I don't know. Probably didn't deserve to get arrested. It's my kind of initial knee-jerk reaction. But let's see what the facts come out. And does this affect the markets? No, I do not think that it does affect the markets. I think we're all looking at Kevin Warsh trying to parse the tea leaves. What does he mean for the future of the Fed, future of fiscal policy, interest rates, etc.? I think mostly dovish. Hopefully, he can get the Trump agenda enacted. Make it work with Trump, work with Besson. It's not going to be an adversarial thing. Like that's the thing. If people are bearish on this, it's like, dude, even if he's not going to be great, he's better than Powell, who was like fighting Trump tooth and nail.
Well, and he also has openly said, even on this last one, he was one that wanted to cut rates again. So, I mean, he understands, he's seeing the data, he understands that inflation is going down, tariffs have not been inflationary, and then also thinks that AI can create deflationary circumstances, which you don't want as the Fed either. So it'll be interesting. We'll see what happens. I don't like the fact that it isn't a fan of QE, because I want that liquidity, I want that QE, but we did talk about if lower interest rates come in, the market will create some QE off of that because money gets cheaper. But also you're going to see QE with lower taxes, with tax refunds, and with tariff rebates, which is kind of Trump's administration forcing of QE based off the profits they've had off other places in the economy.
Yeah, exactly. QE by the Treasury, QE by the President rather than the Fed. So it can play out like that as I see it. One thing I think going back to the question of AI, I think AI is highly disinflationary. If you look, maybe you can pull up this tweet from the Kobayashi letter. They just laid out, just in the past few months, it's got to be close to 1 million jobs across the U.S. federal government and like 20 major corporations. We just saw Amazon lay off 16,000 people yesterday. And these are not warehouse workers. These are like middle management types. The type that is susceptible to getting replaced by AI. And so what happens if AI continues to erode the job market, hurts employment figures, obviously very disinflationary, and would then lead to lower interest rates to kind of combat that. So, look at all
here's the Kobayashi letter saying AI is officially replacing jobs at mass scale in the U.S. Now, I don't know about AI replacing jobs here at this higher end U.S. government number here, because this was kind of the mandate of the people. government's bloated, fire people, close down, education department, close down departments, NGOs, all that stuff, and that's a lot of those employees. But I will agree with UPS, Amazon, Intel, Nissan, Nestle, Microsoft, many of these, their own CEOs, CFOs have come out and said a lot of these layoffs have become to more efficiencies that they've created via AI or via new technology, and that's why they don't need these employees. Why does Amazon need 30,000 extra employees if AI can do some of the sorting, if AI can do some of the macros within Excel files, if AI and robot technology can actually do some of the packaging as well? You don't need those 30,000 extra employees that are now demanding $25 an hour versus the robot who has one upfront cost and some maintenance worker who will keep them rolling. So this is what we're seeing. Their own biggest players have put this on the back of AI and the back of technological advancements, and people fear that, oh my gosh, where are all these people going to go? This isn't anything new though. We've had many advancements, whether industrial, et cetera, and the American people always find a way to monetize that or find new ways to survive. So we'll see how this goes. I think it's necessary for the USA to remain the superpower that it is. You got to advance faster than everybody else. And we just got to figure out how all these Americans can continue to make money and have better affordability when they can't make money, I guess.
Yeah, my takeaway as the AI disruption topic is, one, loyalty does not matter. I'm sure there's plenty of stories that Amazon employees, I was employee number 150 and they let me go. Oh, yeah, there's no loyalty in corporate America. So, you got to look out for your own ass.
Yeah, get to the top or find your way out the door.
Yeah, they ain't caring about you. They'll pay you and they'll employ you as long as you're of use to them, and then you're not. Then you're out on your ass. So you better have some skills that you can make yourself self-sufficient. You better have some investments.
Go learn how to use AI. Too.
Yeah, you better be invested into some stuff so you can weather these storms. The other thing too is, like, you mentioned technologies that have disrupted and displaced workers in the past. I think most of those examples were more blue-collar workers, right? On the factory line, for example. Okay, now robots have taken over a lot of the manual labor that was done in factories. Okay, we know that. Farming, a lot of machinery that used to be done by hand. Okay, so that's farmers, quote, lower skill, whatever. Now all of a sudden it's white-collar workers at risk. This is the kind of a newer thing. Maybe you go back to like when the computer was created and there was people who used to be typists and so this is different, man. This is different. And the pace that AI is going, I don't know. I don't have any answers for you guys. Just be invested. Invest in the AI stuff, by the way. Invest in AI companies. They make all the money.
Yeah, it's interesting seeing NVIDIA not on this list, but I guess that's because they're making so much money they can keep people employed. But the president of NVIDIA talked about what is intelligence and what is a good job. And he said, normally you would say, oh, intelligence is the people who are building software. That's one of the hardest things to do. But now that is the first thing that AI is going after, is streamlining software development and coding and doing the job that somebody else would have a 3-month project and doing that in 1 day and with the help of AI. So it's like you said, the AI work or the white collar workers, these software developers, these super geniuses are now the ones that are first to be replaced with this new AI technology.
So does that mean podcasters like us are safe, or are even robots going to do our job? I got a robot cryptometer.
AI is going to be able to take information and they can come on here and do the live show. Now, they might not be as entertaining and they might not have as strong of opinions because they're just going to be looking purely at data sets. So maybe we're okay. But I will say we need to have markets do a little better so we can pick some winners so we can get the viewership back up and make sure everybody in this community makes a bag before AI replaces you everywhere.
Well, that's a very good point. Yeah, but no, I mean, if you're just super technical and your job is just someone that can be replaced by AI, I would be concerned. But as it relates to the Fed, I mean, the Fed's got to get out in front of this stuff. I just think Powell was so slow moving, so backward looking, cherry picking data, not looking holistically, not looking big picture, just like, we only look at these 2 data sets. We looked at the 2 data sets that we look at. We disregard all other sources of information, and we thought that inflation was higher based on that. It's like, what about this, and this, dude? How are you disregarding all other data sets in the real-time data? And what's coming down the pipe with AI? But, Trump's tariffs. I mean, that was going to cause so much inflation, so we had to pause rate reductions. And we had to get everyone in a huge kerfluffle because Trump's tariffs were going to destroy the world. But we don't really look at AI too much. Powell his head is in his ass. So hopefully, Kevin Warsh, you do a better job, bro. I think you can. I like these younger. I like these aligned with Trump. Wants to get rates lower. We'll see about the QE. And I don't think the markets are reacting that poorly. I mean, for everyone who's like, oh, the market's, this is why the market's dumping because of Kevin Warsh. Well, no. I mean, when you got announced.
Stock market not doing too bad. I mean, crypto looks like shit, but, you know, it is what it is.
But that was from yesterday.
Right.
That was yesterday's dump.
That's true. Yeah, if anything, you could argue that Bitcoin's rallied $3,000 after the Warsh announcement.
Yeah, I'm saying, like, I don't think the market hates it. The stock market certainly doesn't. The dump yesterday was, I don't know if that was out of the blue. Was that because of Iran FUD? Was that because of fucking shutdown FUD? Was that because of Binance manipulation? Like, we don't even know. It was this four-year cyclist dumping because they're just over it. Like, who, or, you know, short-term holders capitulating because price not go up fast enough. All of the above, probably all of the above. I don't think it was Kevin Warsh, though.
Well, that's an hour and 10 minutes. Tons of news stories. Very little TA because there isn't much TA to do, but we did look at the big boys. No real altcoins doing anything. All red across the board on my TradingView feed and my DEX Tools feed for the most part. And, yeah, I mean, what are you going to say?
Say just good morning to Martin real quick. Good morning. Had internet issues. Glad to join. Thank you, sir. Yeah, man, it's a bit of a slowish day, you could say. So we'll probably wrap it up here soon. But I just saw gold fell under $5,000.
Wow.
So, you know, is this the end of the gold parabolic move? And is money ready to flow in other assets? Fingers crossed, yes. Unless, of course, you're a gold bug.
Yeah, I would love to see gold kind of, you know, meander, find a footing here, and slowly reset back to the 200 moving average at $4,600 or even the 300 moving average at $4,500 because that consolidation level would be quite a sell-off from the high. And maybe we'll get that same rotation we saw 3 months ago and the same rotation we saw back in April into Bitcoin and other crypto assets.
Well, let's pray for the crypto markets as we always do. See what happens with gold over the weekend. Hopefully no crazy news out of the Trump administration vis-a-vis Iran. That would be not good. So let's just hope for a calm, no news weekend here. And if we get that for a couple days, a couple weeks, I would not be surprised if we see Bitcoin back above 90,000 within that time frame. So, Pray to the crypto gods, as it were. We're going to sign off for this week. Thank you, everyone who tuned in today, all the other days. We'll be back next week with some great stories, juicy takes,
hopefully
and overall bullishness.
Yeah, I was going to say, hopefully the low liquidity weekend works in our favor since prices have been so low. We can get some kind of low liquidity pump this weekend. That'd be nice.
Can Binance just like fat finger that $1 billion buy?
Yeah, do it on like Saturday or Sunday. Actually, no, do Saturday, low liquidity, and then the market has time to FOMO all Sunday as well before the stock market opens on Monday.
Like, I don't want to see them like going to the OTC desks, going to the miners, doing it behind the scenes. Like, I want them buying spot off the order books, causing massive green candles. Like, that is the least they can do for us.
Right.
All right, CZ. So fat finger, $1 billion single buy on the order book. And let's get some green candles for this weekend. All right, ladies and gents, thanks for tuning in. Until next time, y'all. We'll see you on the beach.